This is Nightly Business Report with Bill Griffith and Sue Herrera.
Your turn. China retaliates by slapping a 25% tariff on billions of dollars worth of U.S. goods just hours after we did the same. And those trade jitters were felt on Wall Street.
To your health, CVS defends its business model and its bid for Aetna could transform the healthcare industry. What that means for companies and consumers.
And all in, how Massachusetts casinos are making a push to close the gender gap. All that and much more tonight on Nightly Business Report for this Wednesday, August the 8th. And we do bid you good evening, everybody, and welcome. China has fired the latest salvo in the month-long trade tiff with the United States. The Chinese Ministry of Commerce this morning announced a 25% tariff on $16 billion worth of U.S. goods. Some of those items this time being targeted include cars and motorcycles, various types of fuels, and fiber optic cables. Just yesterday, the U.S. Trade Representative's office released a finalized list of $16 billion worth of Chinese goods. That will be put into effect starting on August 23rd. Now, that brings the total value of Chinese goods facing a 25% tariff so far to $50 billion. Sue?
And Bill, that China retaliation put a firm lid on gains today on Wall Street. But a rise in shares of Facebook and Amazon helped the NASDAQ to its 7th straight day of gains. That index's longest since March. But the trade worries clearly took center stage. The Dow fell just about 45 points to 25,583. The NASDAQ scratched out a gain of 4, and the S&P 500 dropped a fraction.
Now, even as U.S. farmers find themselves in the crosshairs of this tariff war, most of them are still standing by President Trump and his policies for now. Kayla Tausche reports for us tonight from Washington.
The cost of the trade war for Indiana farmer Mike Beard is already $15,000 thanks to falling corn prices.
We're feeling a lot of pain right now in the farm sector. We were not, we weren't expecting this when we put the crop in the ground.
For Beard, it means he won't invest in new machinery. For neighboring soybean farmer Brent Bible, it's the difference between profit and loss this year.
The market has the ability to stay way undervalued because of the tariff talks longer than a farmer can stay liquid.
Bible says tariffs are not the right way to open up trade, but it doesn't cancel out overall support for the president.
You don't forfeit your right to disagree simply because you're a supporter.
So far, that's been true. Despite tariffs taking effect, the president's approval among rural voters since the spring has remained steady or increased in the vast majority of farm states, according to research firm Morning Consult. That support is held up by tax reform and looser regulation, especially environmental rules for livestock. Iowa farmer Eric Nelson will earn less selling soybeans this year, but likes the president's long-term trade goals.
Trade is always good for someone, but it hasn't always been good for those of us out here in the country. I think some of the corporations that actually do the selling of these commodities overseas, they do quite well. And it doesn't always get transferred back to those of us out here in the country.
But with harvest season approaching, farmers may change their minds if they don't see new deals.
Our attitude could be changed by the actions of the trade negotiators as we go along here in the next 60 days.
Rural voters say trade is just one issue among many on their minds as they head to the polls this November. But it's increasingly an issue where they're betting the farm. For Nightly Business Report, I'm Kayla Tausche in Washington.
Retail and pharmacy benefits giant CVS Health reported adjusted earnings results that beat analysts' expectations. The shares rose 4%. And as Bertha Coombs reports, the pharmacy firm is reassuring investors that its merger with Aetna is on track and that its business model, though under assault, still benefits employers and consumers.
CVS executives are upbeat about the antitrust review of their $69 billion deal to buy Aetna. On the company's earnings call, CEO Larry Merlo said he's still confident the deal will close this year.
While I won't provide details on our interactions, I can tell you that we are having productive discussions with regulators.
But Merlo pushed back at some of the regulatory pressure coming from the Trump administration over drug rebates, those confidential price discounts pharmacy benefit firms like CVS and Express Scripts extract from drug makers.
Drug manufacturers want you to believe that increasing drug prices are a result of them having to pay rebates and that PBMs are retaining these rebates, and this is simply not true. Our data show that list price is increasing faster for drugs with small rebates than it is for medications with substantial rebates.
The administration has yet to finalize rules on rebates, but Merlo said those discounts will now account for just 3% of CVS 2018 revenues. The PBM unit is passing on 98% of rebate dollars to insurance plans and employers who pay for drug benefits, while urging them to pass on the savings to consumers.
We're encouraging, our clients that have, high deductible plans to take a portion of those rebate dollars and pass them back to, their members at the pharmacy counter while they're in that deductible phase, where their out-of-pocket costs, dramatically go down.
But not everyone is convinced. As CVS looks to become a bigger healthcare player in insurance with the Aetna acquisition and in care delivery through its pharmacy clinics, the American Medical Association is now coming out against the merger, arguing that the combined firm will result in too high concentration in the Medicare Part D drug plan market and higher prices for consumers. The AMA is urging the administration to block the deal. For Nightly Business Report, I'm Bertha Coombs, New York.
Vishnu Legraj is with Morningstar. He's the healthcare analyst there who joins us now to talk more about this changing landscape, especially as we look at CVS. Vishnu, thanks for joining us tonight.
Thanks for having me.
I'm fascinated by this transformation that we're witnessing in the beginning stages here of the healthcare industry. And I want to add one more element. CVS also announcing today an increasing partnership with a company called Teladoc, where they will provide video doctor visits for customers nationwide as well when they come to the stores. In other words, customers will become patients, and then they, I guess, hope patients will become customers as well. When you add that to the fact that they're pharmacy benefit managers and buying an insurance company, is that the business model of the future in healthcare, do you think?
For CVS in particular, yes, but there's not many firms out there that can match CVS in terms of the scale, the reach, the kind of vertical integration it's going to have if it closes on Aetna. What it will have is a company that can reach almost every consumer in the U.S. through the retail network and be able to treat these members or treat these individuals at a lower cost in terms of medical care, more so than what almost any other company could be able to do if they're able to close this transaction or close this deal and be able to execute on their strategy flawlessly.
It seems as though the company, to Bill's point, it has really morphed into a healthcare company rather than just a pharmacy or a drugstore. How much pricing power do you think they are going to have with this Aetna deal, if indeed it does go through?
It's a great deal of pricing power they're going to have in terms of using their PBM, using their muscle to gain discounts from providers, from doctors. But where the real value is for this whole deal is the ability for them to utilize those retail networks, those retail outlets, and be able to treat their members at a lower cost within those retail outlets through their own medical clinics. That's where the real value lies, and that's where they're going to be able to treat Medicare patients, for example, at a lower cost, treat Medicaid patients at a lower cost. And ultimately, this should flow back to the consumer in terms of lower premiums, or at least premiums that won't grow as much as they have been over the last several decades.
But you're going to need competition to make that all happen so that you don't see this over-concentration in one company. And you feel like you need to see a Walgreens or even a Walmart participate in this consolidation, right?
Yeah, no, I mean, not necessarily in terms of head-to-head competition with CVS. I mean, if someone were to partner or buy, let's say, a Walgreens or partner with a Walmart, then they could have a service that's going to be comparable to what CVS and Aetna will bring to the table. But ultimately, at the end of the day, if CVS and Aetna can have lower premiums and be able to market their products at a better competitive pricing level, they're going to gain more membership. In order to do that, in order to accomplish that goal, they'll have to treat their members at a lower cost. And again, the key asset here, the crown jewel of this whole acquisition, is going to be the utilization and leverage of the retail stores and being able to drive traffic and drive their own members into those stores at a lower cost of care.
We will see if they can pull that off. Vishnu Legraj from Morningstar. Again, thanks for joining us tonight.
Thank you.
It is time to take a look at some of today's upgrades and downgrades. Bristol-Myers Squibb was upgraded at Atlantic Equities from underweight to neutral. The firm cites potential in Bristol's drug pipeline and an improved risk-reward for the stock. The price target was raised to $55 a share. Today, shares closed at $60.17, up 2%. Mallinckrodt was downgraded at Raymond James from outperform to market perform following the pharmaceutical company's second quarter earnings. The firm cited the stock's valuation and sees limited possibilities for outperformance because of long-term risks to key products. The shares fell a fraction to $29.33.
Spark Therapeutics was cut at BMO Capital to market perform from outperform. The analyst there is citing disappointing trial results for Spark's drug treating hemophilia. The price target was lowered to 60 from 98. Spark rose 3% today to 57.70. Hostess Brands was lowered at RBC Capital from outperform to sector perform following weak earnings, in which it was revealed on a conference call that Walmart cut back on promotional displays of Hostess products. The analyst also cited higher freight, labor, and packaging costs as well. Price target now $14. Shares finished at $11.49, down 17.5% today.
Now back to California, where fires continued to rage, including the largest wildfire ever in the Golden State. Aditi Roy is in Ukiah, California.
The stubborn flames of the Mendocino Complex fire are tall and fierce, destroying 116 homes, scorching more than 300,000 acres, and forcing more than 23,000 people to flee their homes.
It's a loud roar, the loudest roar I've ever heard. It sounded basically like a jet taking off.
Two fires, the ranch and the river, make up the Mendocino Complex, the largest wildfire in California history. The ranch is the more challenging one, its flames burning deep inside a remote forest and the ridge of a mountain. But today, weather conditions, lower temperatures, calmer winds, and higher humidity helped firefighters make progress.
We saw a lot less fire activity than we've seen the previous days. The fire didn't make huge runs or any huge growths in the evening time like we saw over the weekend.
More than 10,000 structures are still threatened by the fire. There are more than a dozen wildfires burning throughout the state, including one that has shut down Yosemite National Park, where an average of more than 600,000 visitors go every August, according to the National Park Service. Annually, tourists spend more than $520 million at the park. This year could also turn out to be a costly wildfire season. It's too soon to estimate the monetary damage from these fires, but an example of how devastating these can be. Some estimate last year's fire that destroyed some of the wine country could end up topping $2.5 billion in claims. Officials say the effects of the state's drought, along with searing temperatures, have made conditions ripe for wildfires to erupt.
The fires are hotter, the fires are moving faster, the fire behavior that our firefighters are seeing is very unpredictable, more so than we've ever seen before.
While fire officials say they're making good progress on the Mendocino Complex, that's little solace for Bree Harles, who had to postpone her wedding because of the destruction.
We were planning on going forward with it, but then the smoke just was really bad, and we had a lot of family coming from out of town, which would fill hotel rooms that we didn't want to take from the people here.
Firefighters are in a bit of a race against the clock as they battle these flames. It's supposed to get hotter, drier, and windier tomorrow, so they're hoping to make as much progress as possible against the fire before conditions change. For a Nightly Business Report, I'm Aditi Roy, Ukiah, California.
Coming up, a setback for the likes of Uber.
I'm Eric Chemi in New York City, where the city council today putting first in the nation regulations on rideshare companies like Uber and Lyft. Later on Nightly Business Report.
New York Congressman Chris Collins was indicted on federal insider trading charges today. The Republican representative was accused of providing non-public information about an Australian biotech company to his son and future father-in-law. Collins sat on that company's board of directors. According to the indictment, Collins and his family avoided more than $700,000 worth of losses after the biotech saw disappointing results from a drug study.
Well, the popular ride-hailing services many of us use, like Lyft and Uber, suffered a potentially significant setback today that could have global implications. The New York City Council approved measures essentially aimed at curbing the growth of these companies following outcries from taxi drivers over the plummeting value of their franchises. Eric Chemi, as you saw, has our story for us tonight.
New York City taxi drivers are rallying today as the city dealt a major blow to their competitors from ride-hailing apps like Uber, Lyft, and Via. The New York City Council passed new restrictions on for-hire drivers, which will cap the issuance of new licenses for 1 year while the city studies the impact of these companies, and set a minimum wage for drivers. It's the first time a minimum wage has been set for gig economy workers anywhere in the country. There has been an explosion in the number of for-hire licenses in New York, which was at 65,000 just 3 years ago and is now well over 100,000, dwarfing the 13,000 taxi medallions on the road.
We are positing the issuance of new licenses in an industry that has been allowed to proliferate without any appropriate check or regulation.
Uber, for its part, says the new laws will restrict riders in underserved areas, and the company's promising to fight back. The company releasing a statement saying, in the meantime, Uber will do whatever it takes to keep up with growing demand and will not stop working with city and state leaders. Financial experts warned that today's rules could put a big dent on Uber's market valuation as the company is expected to go public next year. Of course, this isn't the first run-in with authorities. Uber's had several problems around the globe, including places like England and France. So the news today will reverberate around the globe. For Nightly Business Report, I'm Eric Chemi in New York City.
Michael Kors gets a lift from its Jimmy Choo heels, and that's where we begin tonight's market focus. The apparel retailer grew sales in its Jimmy Choo business at a quicker than expected pace, and that helped overall earnings surpass expectations. The company also raised its financial outlook for the full year. Shares rose nearly 7% to $70.01. A rise in subscription revenue helped the New York Times report earnings that edged past expectations. But the focus was on the newspaper publisher's digital business, which added fewer paid subscribers and saw a drop in ad sales. Shares were off more than 6% to $22.70.
And then after the bell, video streaming platform Roku said that its sales grew as it made more money from licensing fees and advertising. Analysts were expecting a loss, but Roku actually surprised the street with break-even results. And as you can imagine, shares initially traded higher in the extended hour session. They finished the regular day down marginally at $47.25. And 21st Century Fox also delivered better than expected earnings after the bell. The media conglomerate said the success of the motion picture Deadpool 2 and strong performance in its cable network programming helped results. Separately, under British rules, Fox has until September 22nd now to top Comcast's $34 billion offer for TV giant Sky. Shares of 21st Century Fox were volatile in the after hours, ended the day down a tick at 45.46.
Sending your child off to college and figuring out how to pay for it can be overwhelming. Trust me. Americans now owe over $1.5 trillion in student loan debt, and many borrowers are parents who may take on even larger loans than their children. So our senior personal finance correspondent Sharon Epperson is here with more on that and some tips for you and your college-bound kid. I am taking notes.
I'm done with that. I don't have to worry about that.
You could do this segment perhaps.
Well,
but
I'm going to have 3 in college at once, so I'm taking notes. So when it comes to student debt, Sharon, you know, a lot of parents and students apply for financial aid. When you get the financial aid package, How else can you kind of negotiate that debt?
Well, the thing to know about the financial aid package is the majority of that package is likely going to be loans. And according to Sallie Mae, 40% of families borrow money to pay for college. And I say families because these loans are being taken out not just by the student, but also by the parent. And in fact, the average loan balance for the student is less than that of the parent in many cases. There is a limit to what student federal loan balances can be and what you can take out. And so parents want to make up the difference. They're taking out more, and that balance is growing even more rapidly than the average loan balance for students.
You need a budget. Either the student needs the budget when they're in college, right?
They do need the budget in college. They also need to figure out, first of all, what they're going to owe. And not just that first year, but look at all 4 years. Figure out what your loan projection is going to be to make sure the return on investment makes sense. That is kind of reviewing the student loans, and that's really the first step to take. And then you also want to make sure that as you're looking at subsequent years, you do it as soon as possible. So October 1st, I know it seems early, you can already submit your federal application for financial aid, that FAFSA form, to find out what you're going to be able to get for the next school year. So you got that loan package or the financial aid package for the first year. The second year, October 1st of their freshman year, is when you need to start looking into that.
The other costs that are there are the textbooks, supplies, all of those things that they absolutely need but cost a lot of money. Yes. Is there a way around that?
So look for discounts everywhere. You can rent textbooks, which I never did, but now everyone does. Right. Chegg.com, that's a great place to go for that. You also want to look at Apple, Dell, Best Buy have great discounts on laptops. Now is the time to really look for those. Local restaurants get the discounts on food. And this is what I really didn't realize. 10, 15, 20% off on clothing just for being a student. So Nike, American Eagle, yes, Banana Republic, those are places to look, and thank you, CNBC interns, for telling us that.
Thank you, Sharon.
Just for T-shirts and shorts, what do you want?
There you go.
Yeah.
You're going to have to hold my hand, honey.
Well,
thanks,
we'll
Sharon.
hold each other's hands.
There you go.
All right.
Thanks, Sharon. Up next, closing the gap.
Big new casinos are rising above the state of Massachusetts, but to get their gaming license, they had to commit to women in hard hats. I'm Contessa Brewer. I have more details coming up on Nightly Business Report.
And finally tonight, we've been telling you about the shortage of skilled construction workers across the country. Well, now one project in Massachusetts has set out to address the skills gap and also the gender gap. Contessa Brewer is in the Bay State for us tonight.
Rising across from the Boston skyline, a new casino takes shape thanks to thousands of construction workers.
We do the heating and cooling, HVAC, for the building.
Savi Mandoorty is one of 328 women working construction at Encore Boston Harbor, but it's taken her 10 years to reach her goal, journeyman pipe fitter.
I would let them know that it's a great opportunity, it's great benefits. It's not hard as people view it as. Women, we're just as hard workers as men on the job site as well. We lace our boots and tie them just the same way as they do.
Now she's the face of a statewide initiative to recruit women into construction.
In order to make this work, you have to have a kick-ass champion. And you got to kick these doors down.
The Massachusetts Gaming Commission has been instrumental following a mandate by the legislature to increase workforce diversity. It requires these casinos to put women in 6.9% of the construction jobs. That's more than double the national average, and the commission is tough about enforcing it.
We go union by union, contractor by contractor. Have you met the target? And if you're an outlier, somebody else is doing 8% women and you're only doing 0% women, we call you out.
But they soon realized there simply weren't enough skilled tradeswomen to meet those goals. So the commission partnered with unions, casinos, and nonprofits to get more women in the pipeline.
It's been very hard. It takes a concerted effort, and it really takes a partnership with the local trade unions as well as the contractors. They have to push these requirements down to their subcontractors, and it can be in many cases more expensive because you're taking inexperienced labor and you're putting them on the site and you're making sure that you train them up. But we've made that investment, as has our partners.
In the western part of the state, MGM Springfield will open its casino doors in mid-August. Its construction workforce exceeded the diversity requirement, employing 7.5% women, including an all-female demolition team.
It's important to get a woman's perspective on every aspect of the job, whether it's the office or it's out here on the construction site.
Encore Boston Harbor just hit the 7% mark last month, a milestone achievement for the newly renamed project, struggling to emerge from the shadow of a Me Too scandal engulfing its former CEO, Steve Wynn, and threatening the status of its gaming license. But its president expects a high return on investment made in the diversity initiative.
I think we'll wind up with a better work environment and a better place for our guests to enjoy, because they'll look around and see that we are really reflective of today's society.
The recruitment efforts also focus on hiring workers of color and veterans.
And as a journey worker, once they reach that level, they can make $90,000 a year. So it can be a life-changing experience, not only for the individual, but the communities in which they live. It actually leads to economic stability and security for everybody.
10 years ago, Savi was making minimum wage and living with her father. Today,
I just bought a house.
Would you have ever been able to do that on what you were earning?
Not at all, no.
The statewide campaign aims to see 20% women employed in construction by 2020, a lofty goal. But the winds of change are blowing in Massachusetts. In Everett, Contessa Brewer, Nightly Business Report.
And before we go, a final look at the day on Wall Street. Mixed day. The Dow fell by 45 points, finished at 25,583. The Nasdaq added just 4, and the S&P was down a fraction for this Wednesday. That's my turn. That's Nightly Business Report for tonight. That makes me Bill Griffith. Thanks for watching.
I'm Sue Herrera. Have a great evening. See you tomorrow.